Next, we will have a panel discussion. Wow, will be interesting. The title is Cloud Native Digitalization, Challenges and Opportunities for Innovation. This session will be led by Mr. Aditya Hadi as the tech journalist from Tech in Asia. And for the speakers, we will have Ms. Stacy Oentoro as the VP of Investment from East Ventures, and also Mr. Juvenco as the Principal Skystar Venture Capital. Please welcome Mr. Aditya.
Hey, okay, good afternoon everyone. Welcome to Alibaba Cloud Startup Day Indonesia. Maybe give a round of applause for all of us. Thank you. Now, my name is Aditya Hadi Pratama. I'm a tech journalist from Tech in Asia. And it's an honor for me to become a moderator for this upcoming panel session. We were talking about the cloud native digitalization, challenges and opportunities for innovation. And we will have two amazing panelists here. Each of them has an experience in investing in amazing startups. And they, with a lot of companies, really a lot of companies in their portfolio actually. And they must have a lot of insights on how to be successful in this digital world. So please welcome Stacy Oentoro, Vice President of Investment at East Ventures. Yeah. Yeah, please, Stacy. And then the second one is Juvenco, Principal of Skystar Capital. Okay, hi Stacy, Juven.
Hi.
Good day.
Hello.
Good day. Good day, Adit.
I think Jakarta already have a bad traffic nowadays, right?
Yeah.
It's a good and bad news for us, actually.
Yeah, everything seems to be back to normal now, Dit.
Yeah, really.
It's good to see familiar faces
Yeah.
offline. So I always meet Stacy on the screen.
Right, for sure.
Okay, yeah, I think first of all, I want to give opportunities for both of you to introduce your company in case there are some of the attendees here and also in the Zoom who haven't heard of them. And maybe you can explain your role there, plus maybe a little explanation about the criteria of startups that you want to invest, maybe nowadays and in the near future. Please, Stacy, maybe you can start.
Sure. Hi, everybody. My name is Stacy Oentoro, and I am representing East Ventures today. East Ventures is a sector-agnostic, multi-stage investment firm based here in Jakarta, Indonesia, and also in Singapore. We have over 200 plus portfolios between our early stage and also our growth stage companies. We are sector agnostic, which basically is a fancy industry way of saying that we're consistently interested in any kind of company. We are just consistently looking for entrepreneurs who are really eager to innovate and also kind of find new solutions to the way that we live, work, and also do lives. And a little bit about me, I've been with East for a little bit of almost 2 years now. Adit actually used to be at East Ventures, so we're very familiar. I think Adit can actually provide all of my answers. But very happy and very honored to be here today with, obviously, with everybody here. And yeah, that's a little bit about me.
Yeah, thank you, Stacy. Juven?
A bit about Skystar Capital. We're basically a tech VC firm. We're backed by one of the largest private equity and the oldest, called Saratoga Group. So we're basically the VC arm of Saratoga. We do tech investments, while Saratoga focuses more on natural resources, mining, infrastructure, we basically like to come early and create impact for our startup. And we usually invest in, early at 200K up to 2 million. But considering we have our big brother Saratoga, we can write check up to 100 million. The kinds of startups that we like to invest is basically, usually would be like a very strong founder with reputable backgrounds, complementary team, complementary skill sets, and definitely, coming at the right timing where we usually would see on the market readiness, product market fit, strong traction, and that actually gives us the strong fundamentals, to work on the deal and to have the conviction to basically pull the trigger to invest.
I see. Thank you, Juven. Yeah, I think it's interesting. Juven talk about the good founders aspect, right? So I'm aware that East Ventures also put a lot of attention on founders, right? So maybe in the beginning of the session, before we move to the to dig down to the cloud aspect of it, can you explain about what kind of founders that you want to see, what kind of trait, what kind of characteristic that you want to see, and you were willing to invest, Stacy?
Sure, yeah. So for us, obviously, for East, and I'm sure for Skystar, we actually work a lot together as well. We share a lot of cap tables together. But for us, obviously, people is a very important part of our investment thesis because East Ventures is known to actually be very quick with their investments, right? So when our managing partner, Wilson, actually closed Tokopedia within 48 hours, and that's something that we're just known for is kind of the speed and the velocity of our investments. So the reason that I think we're very quick to, I guess, come to a conclusion is we typically like to really find founders who are really experts in what they're talking about and also passionate, right, Adit? So I think it's very easy for us to maybe triangulate or to find information in this digital age, like everything that you want to know and everything you want to talk about. Honestly, like as everybody was presenting earlier, Toko Crypto, all of these amazing entrepreneurs, you can just Google, right? What are they about? What is their entire thesis about the industry? But I think what really differentiates a person and like a really good and a great entrepreneur is their ability to passionately depict why they really believe that they can solve the problem that they see in the market, right? So the market problem that they see is very important, but also their articulation. Are they actually passionate? And you can sense, right? Like when somebody is very passionate about the solution, the product that they're building in the market, there's a sense that you can feel, right? So the kind of founders that we're looking for are just people who are consistently looking at opportunities because we believe Indonesia being the fourth largest democracy, this is really the time for entrepreneurs to rise up and also to really compete on the, honestly, global stage for tech, So we're very excited and looking consistently for passionate and well-versed founders, Adit.
I see. Yeah, maybe it's a note for aspiring founders out there. So if you want to talk with East Ventures or maybe Skystar, you have to be patient about what you're doing. Juven, maybe you want to add?
Yeah, I think I can really relate with founders because I've been a founder before. Perhaps I haven't updated to the audience. I used to build the largest mutual fund trading platform in the country called Bibit. Then I exited in 2019 and moved to the VC side. So basically, I moved out from the dark side. So I think I can really relate a lot. We like founders that are product driven, but really have the motivation and a clear vision on how they articulate, how they will solve the problem. We want to see founders with grit and adaptiveness, really agile, can move. While you are in the early stage, you have to basically do multiple pivots and really fast iteration to basically get that strong early traction. So we do like founders that is basically product-driven, half commercial, in a sense that they have to be able to fundraise. So I think that's about the founders that we like.
I see. Now, talking more about the mindset of the founders, Juven, maybe some people said that, nowadays VC are not looking for growth gain, but more on the profitability one. But some people said, no, growth is still the key, something like that. What do you think, Juven, like growth versus profitability? What kind of the right mindset of the founder that you're looking for?
I think it has to be the both worlds, right? So if you look at a few business models that is very successful in the other comparable markets, right? China, so to say, or India, they kind of like leverage the kind that like Speedwork is doing actually, O2O model, which is like in both world of digital and offline, because it's just the infrastructure readiness is not there yet to be able to basically leverage all this digital way of penetrating customers. So I believe it has to be the both ways. I've been to China, I've really experienced how the D2C work there. It's really beautiful where the experience, you really go to the offline store and you just scan the QR code, you check it out on, so to say, SaaS platform like, like a POS platform. And then the inventory will basically ship to your house. So you as a customer, you don't have to bring shopping bags. And for the retailers, it's also an efficient way of them managing the inventory because it's not, you basically you have a less item theft, less item loss in the retail stores. Is basically you are centralized the warehouse and then ship to the customers. So those kind of like O2O, kind of like D2C way of doing it will be the street of both worlds. So I believe in both worlds. So profitability and also revenue, it has to be both worlds.
I see. Stacy, what kind of suggestion that you usually give to your founders?
Yeah, I think the growth and profitability question, I'm pretty sure Tech in Asia has this like wonderful video on it. So if you're interested in knowing more about the details and going into unit economics, I think it's good to check out Tech in Asia for that reference. But I think as an investor, it really depends on the stage of the company, right? So in the early days as an early stage investor, for us, the key for the first few years of being a founder and being a company is really seeing whether or not, number one, the people thesis, right? Is the entrepreneur the champion for the particular vertical they're in, and can they actually operate and execute according to what they promised in the beginning. So the people thesis has to be fulfilled, which means that it will also lead into if this is the right person and if they can execute, then what that leads to is a natural product market fit, right? PM fit is like something that like a buzzword that we always hear within the tech industry, but all that means is basically saying that the top line performance, i.e. revenue, i.e. metrics of growth are being accomplished in the early days, because basically actually the window to achieve for entrepreneurs in the beginning is very important, right? Because the moment you start fundraising, there's some news about you, you need to really capitalize on that momentum. So for us, definitely as an early stage investor, growth is very key. But at the same time, of course, as a smart investor, we also definitely look at the health of the overall unit economics, which means not only looking at the wonderful top line, but how can they maintain a healthy bottom line, right? And of course, depending on the stage of the company, there will be times where it's appropriate to push for growth, and there will be other times, as we've now seen on the stock market going public, it's very important to keep a very focused view on your actual bottom line performance. So it's both and it's also discerning the stage of the company.
I see. Thank you, Stacy.
I want to chime in on that, right? Because I always believe that building a company is always a marathon game. But like Stacy said, right? So in the marathon game, you still have to do a few sprints. And when you do that few sprints, maybe you have to, basically burn in order to do that few sprints. So yeah, I do agree on that, Stacy.
Get it. Now, I think I want to go back to our main topic, which is the cloud-native digitalization, challenges and opportunities for innovation. Juven, maybe we have heard from our fellow founders, like before, like they talking about how the technologies that they're implementing and how they can get help from Alibaba Cloud and other stack of tech innovation. Do you think, as a VC, from your perspective, is it something that you really put importance on when you're checking on the startups that you want to invest, or is there any like specific things that you want to check from before you decide to, okay, I want to invest in this company?
Usually traction talks a lot about the product. So when the traction, when we look into the deal and it really generating strong traction, means that the product is, so to say, at their stage is actually doing the right thing. So basically, they're implementing the right, let's say, cloud native, language. So to say, they are picking the right partner. Let's say Alibaba is known for their speed in network latency, also in scalability, in terms of like cost effectiveness. So we do look into the high level, not so deep. But usually, the high level really says a lot in the technology that they are using, whether they are using the right technology and the right product, for the market.
I see. Stacy, do you want to add?
Yeah, sure. So I think when it comes to any sort of tech infrastructure, so specifically with this forum, obviously we're talking more about the cloud native digitalization method, deployment and kind of methodology, right? So I think when we think about the cloud and just technology in general, we're thinking about three main buckets actually, right? Addressing data privacy, addressing agility of founders, and also teams to be able to build the technology necessary for the infrastructure of the company to run well. And also the third piece is collaboration, right? The point of technology, I think, for East, right, we do not just only invest in tech companies. I think that's a misconstrued perception of us as a VC. We invest in any companies that are changing the way that things are. And typically, in the world that we live in today, technology is what's accelerating and also making our lives easier, right? To an nth degree. So those three things, right? So privacy, collaboration, and also agility for companies to move together. That's why that is the role of technology. But I think when we look back and kind of pull back to the original question, do we look at tech as our investment thesis? I think it depends, again, right? Because like, for example, when you first meet founders and their pre-product, which we've invested in a lot, right? Like we really love good ideas and we'll take a bet on the founder. That's why for East, it's like we are a very people-driven kind of venture capital. Is because we just want to see and we want to gauge whether or not you can be the market winner. And that's kind of like the end statement. But of course, as companies scale, the role of technology is very pivotal because scalability is something that venture capitals like and investors like. So without the leveraging of the right technologies and also the right solutions and deployment, then I think the growth of the company will definitely struggle and stagnate. So the answer is yes and, you know?
Get it. Now, talking about the struggle of being a founder, I think we know the top struggle of people all over the world right now is the pandemic, right? But other than that, can you share what kind of the biggest challenge for the founder right now, especially in Indonesia? We're talking about a country with the large archipelago, right, with a huge amount of people, but there is a fragmented in terms of industry, in terms of their behavior, something like that. Juven, maybe can you talk first about what kind of the biggest challenge that faced by the founders right now?
I think Indonesia is a very unique market. We can't really compare. So VC usually would invest in ideas. Like we do write check, in a very early stage where it's just idea. So we sometimes need, but that's not a blind check, right? So we do write that check based on certain adjusted risk where we can see successful comparables over the compared to the other mature countries. But again, Indonesia is very unique because Indonesia is an archipelagic country. I believe that we can't really have that same, logistic to GDP ratio like China or the US because our logistic system is very multimodal. We have to do sea freight, we have to do land freight and sea freight combined to reach to the whole nation. So for that reason, we are a nation that is unique. And having said that, a lot of our distribution, commerce distribution, are very different with other countries. So in the US, in India, you can see, or in China, you can see everything is very much centralized, the warehouse. In Indo, you kind of like start to hear the term hyper-localized, right? Because that's how Indonesia work, right? We distribute our product in a very fragmented way. And I believe that will be that way. So the challenge for the entrepreneurs would be convincing the venture capital that what I'm doing is basically catering or tailoring to the Indonesian market. So that's one of the biggest challenges that I believe that lots of like the Indonesian entrepreneurs is facing now.
I see. Stacy, after invested in 200 more plus companies, what kind of challenges these kind of things may cause like a big failure for the startup?
So I think the way that I want to approach this question is one man's challenge is another man's opportunity, So I think naturally being an investor, we're not really, of course there are challenges, Adit, right? Because without the challenges, there are no entrepreneurs and there's nothing to fix in the ecosystem, right? So I think the way that I would like to frame any kind of challenge in the tech space or in Indonesia is a really ripe opportunity for people who are every day, like doing their everyday lives, and then saying the best entrepreneurs, this is what they say. They look at that problem and they say, wow, this is a real chance for us to innovate and make people's lives better. And so that's the kind of entrepreneurial spirit that regardless if it's 2020, 2015, 2060, these are the kind of entrepreneurs that I believe will come up from Indonesia, right? Because actually the unique characteristics of this nation, being an archipelago, being very diverse, I think these are not necessarily pockets of challenge, but really moments where Indonesians alike can come together and actually innovate on something that will make the future better. So obviously, right, having 200 plus companies reflects the nature of how different people and different entrepreneurs will try to actually cover an infrastructure gap or a challenge that may not have been met before. So I'm sure you've heard about this, Adit, but like one of the things that we do at East Ventures is a report that we come up with every year called the Digital Competitiveness Index. For us, why is it important for East to map it out is because we take key indicators of what makes tier 1 cities really successful in producing entrepreneurs, and we try to map it throughout Indonesia. And for one of the reasons and the challenges that we've tried to address by having this report out for the public, downloadable everywhere, plug, is the fact that now entrepreneurs, regardless if you're in tier 2, tier 3 cities, you actually have the access to be able to innovate, to be able to identify the stakeholders that you need to convince, whether it's government regulators, whether it's investors. If you have a good idea, the power of tech and the power of digitalization is it should make the world smaller. So I think my biggest thing is every challenge that we see as a proud Indonesian, let's fix it together. Let's find the opportunity. And even if it doesn't work the first time, you know what the best characteristic is, Adit, in an entrepreneur? It's resilience. It's the ability to fail, but at the same time, be able to pick yourself back up again. That's what differentiates the great entrepreneur.
Yeah, I think it's like a word that need to be, I don't know, maybe founders should hang on their bet on something like resilience, right? Every day is resilience day, something like that. Okay, I think talking about the struggle of the founder, something like that. But you said that from every challenges there will be opportunity. I know East Ventures is focused on agnostic industries, right? But is there any specific industries that this is picking up right now, and there is a huge opportunity that maybe founders who haven't founded any company maybe can enter this and ripe the opportunity and get the funding from VC or maybe something like that?
I think the right answer here is that every industry, in light of COVID-19 and the changes and the uncertainties and the chronic nature of just desiring some form of balance, means that every industry right now is ripe for innovation. Of course, in this kind of health crisis, we naturally will respond in such a way where it's like we do want to be funding many companies who are at the front line, right? Like the healthcare companies, the commerce companies that is helping our day-to-day lives. But in all honesty, I think in this past 2 years, we've invested in every sector because it's kind of like a domino effect, right? If you think about it, if companies are built by people, these people are noticing a market problem, that means all of us as consumers and as entrepreneurs, as people who live in this country, we will feel a problem in a different segment. But the different segment, all of it is, there's always an opportunity, right? Especially Indonesia being such a thriving and emerging democracy, again, there's just so many opportunities in every sector. I don't know, Juve, what do you think?
I do agree on that. So we are also a sector agnostic venture capitals at Skystar. But we do like to build our own investment framework where we basically develop our own thesis on certain sectors and we just go hunt for that sector. So to say, example, that we are very bullish at crypto and Web 3.0 because we believe that is very disruptive now. And then we also like the derivatives of let's say COVID, right? So health tech is one of the things that we are very bullish on. I think we just did 3 investments in health tech, late 2021. Also, looking at the unicorns of e-commerce that they are going public. We do understand this kind of trends that has happened in India and also in China with Flipkart, Alibaba. When these unicorns start to do their IPO, they go public, they will focus on profitability because the spotlights are on them. So during this time, it's actually the golden age or golden year of 5 years gap for the social commerce like Pinduoduo, also like Misho actually starts to rise. So we are also believe in social commerce in that sense, and that can actually go to a lot of products such as like grocery social commerce. It can be fashion social commerce, and so on and so on. So yeah, I do agree on that, Stacy.
I see. Now, again, talking about building a startup, I think you also a founder yourself, right? How you compare the world right now, the startup world right now, compared to, I don't know, maybe 5 years ago? Because in terms of
very tough.
In terms of tech infrastructure, for example, in the past years, there's no Alibaba Cloud, right? So people, I don't know, maybe you have to manage the cloud or maybe the infrastructure yourself, and now there is more tech infrastructure, but your competitors also can use that same infrastructure, right? So in terms of competition, it's really tough. But in terms of how the easiness, how easy to launch a product in a fast way, I think it's more easier right now nowadays. What do you think about that kind of condition?
Kind of true, So back in 2000, I started in 2015, right? So 2015 was a very tough times for to launch a product. I think we launched a product in 8 months, while I can see startups nowadays can launch in just like 4 weeks. I think because back in the days we don't have React Native, we don't have Flutter, so everything has to be built from the ground up. So it's all native, like really native language. That's one, right? And you have to have 2 resources to basically maintain the Android part and also the iOS part. And that's why in 2015, if you see the trend, it's basically more of like desktop web rather than on mobile. That's one. Second would be like cloud native isn't that popular, but we have to go to Amazon back then. Sorry. because most of the developers, I think at that time Alibaba, Ali Cloud hasn't had their English version yet. We actually shop around, so we do end up using AWS. But again, it's hard because when you reach that scalability part, you need to talk to the infrastructure guy of the cloud service provider, and that's pretty tough at that time. So, but I think things are very well, very easy nowadays.
I see, but I think the difference is not only in tech infrastructure, but also in the number of founders, the number of VCs coming in Indonesia. Now we see like a huge investor from US, Europe coming to Indonesia. Is there any tweak that, Stacy, is there any tweak that you are doing in these ventures compared to the past, or you just stick in the same hypothesis that you think that is really still relatable nowadays?
I mean, I think East has been an early believer in the Indonesian tech ecosystem, right? I think we are, if not the oldest venture capital that was born in Indonesia for Indonesia, and just consistently believing in this country to become kind of like the really like a big tech hub, to be honest. I think if we didn't believe in Indonesia, we wouldn't have such a laser focus even with our investment thesis and also our portfolio construction. If you look, it's like almost 93% Indonesian companies. So I think, of course, nowadays, there's both pro and con with a maturing market, right? Number one, I think in terms of people, you genuinely have to learn to differentiate. How are you different as an executor? Number two, how is your product different than any other solution that has already been proposed in the market? And also in terms of timing, right? Now is actually a really great time to actually be an entrepreneur, in my opinion, because now, unlike in 2015, everybody is very much well versed with the notion that tech is the future, right? Like if you're not in Web3, if you're not in crypto, if you're not in, if you don't use, I mean, can you imagine a life without Gojek? I cannot imagine a life without Gojek. 2015, you can imagine a life without Gojek, you know? So I think the fact that technology has really simplified our lives signifies the fact that innovation will just continue to happen. But as a result of COVID-19, we at the firm really believe that this is the greatest time for innovators to come alive. So even if, I think my encouragement, right, to anybody is, who here is an entrepreneur? Can you just raise your hand quickly if you're an entrepreneur? Wow, amazing. See, like, I think even looking around, right, the percentage of the room that's an entrepreneur, my biggest encouragement is whatever idea that you have right now, it's a great time. There's a lot of capital ready to be invested, like you said. There's a lot of investors. But also, remember, I think like my plug for, as an investor is find an investment from an investor that you are proud to be represented by. So however you take that, I will leave to you.
Thank you, Stacy. Okay, I think it's a very interesting discussion, but I think our time is limited. It's already up right now. So I would like to close the session with giving you a chance to please give me like one simple answer about what founders has to do when they want to approach a VC to get investment, and what one thing that they must not do. Stacy, you can start.
One thing they must not do. I would.
They must do and they must not do.
For both of those things, I guess, is do the initial work, right? Like, so one of my biggest turnoffs when I come to an investment meeting is if you have no clue about the ecosystem that the VC has already built, you don't really know like any, like, you know, like these factors are very important, right? Like you need to know and understand what's happening in the market, and knowing about the VC that you approach is very important. Because again, this comes back to my previous comment, right? As an entrepreneur, find investment from an investor that you will be proud to represent you and to be by your side. Because every investor is very different, right? I think like the value creation is different, the go-to-market advice will be different, and the ecosystem will be different. So do not come without not knowing anything about the ecosystem. Just do the work beforehand, you know? Yeah.
I see. Juven?
Yeah, I agree with that. So I think one thing, I think to conclude, the answer is shop to the right investors, because capital is ample out there. And, you know, with different business models will require different kind of financing. So to say, why technology, it's equity financing, because basically you can't go to banks. You can't get loans because you basically don't have collateral, there's no cash flow, stuff like that. But let's say if you are a business that is doing D2C, maybe you have cash flow, maybe you have a bit of capex. Perhaps you can go to banks to ask for loan, and that's actually cheaper in terms of like financing for your end. So yeah, basically that's kind of like do's and don'ts. So shop to the right audience.
I see. Thank you.